So, Brad Gerstner, it's good to have you back, and it's great timing, and no offense taken at the fact that you'll only wear a suit if you're going to the White House. I sort of figured that, and this is what I expected you to be in today. And we'll get to all of that a little bit later. But I do want your current market view, because I know you did get more bullish on these markets towards the end of April and into early May. And here we are, as I said at the very top, we're just a couple of percentage points from a new all-time high on the S&P. So give us the lay of the land as you see it.
Well, Scott, it's great to be here. Thanks for having me. And, when we talked in early May, what I said was the reason we had turned, right, we were negative heading into Liberation Day, because the administration had not made clear. There were two doors they could follow on global tariffs. I described the first door as what nuclear Navarro, $1 to $2 trillion in global tariffs, returned to a McKinley age, the late 1900s, where we derive most of our revenue from tariffs. And the other one was what I described as fair trade Besant, landing the plane closer to $300 billion in annual tariff revenue. And that was, by May 2nd, that had become pretty clear that that's the direction the president was headed. Now it's even more certain that that's the case, right? We're on the verge, or it looks like we have a deal with China that will be one of the most important ones. We're tracking ahead with Europe. And so I feel very comfortable where we're going to land the plane on tariffs. Secondly, it looks increasingly likely that the reconciliation bill, what the president describes as the big, beautiful bill, will in fact get signed into law in early July. That will not only give certainty to the markets about the extension of the current tax regime that exists, but it also adds new stimulus in the form of no tax on tips, no tax on overtime, and the deductibility of Social Security, which is effectively a tax break for seniors on their Social Security income. So that's incremental stimulus. And then the third thing that I think is not yet being talked about is we have these rate cuts coming in the back half of the year. So I think that's the potential trifecta for this economy, an incredible pro-growth administration that is landing the plane on tariffs, that is landing the plane on the reconciliation bill, and we have rate cuts ahead. That caused us to get a lot more bullish at the beginning of May. We remain so today. In fact, we're in our top 25% in terms of our exposure limits that we have on as a firm. And then behind all of this, of course, is we have the AI super cycle. We've seen a reacceleration in both the top line and the earnings. Oracle reported last night, blockbuster numbers. 80% of the S&P that reported all beat. The Mag 7 all beat and accelerated. And so I think that, so long as the government does these things that I describe, I think the economy's ready to cook.